There we go. Well, good morning. Welcome to the ATFX Africa live analysis session. So this session is part of the market brief. And what are we going to do today? Well, we are going to have a look at some markets. We are going to have a look at them both from a fundamental and a technical point of view. We are going to look at some setups, and then we are, just going to go through the markets. I'm going to ask or answer all your burning questions regarding the markets as well. And then we will go from there on forward. So first things first, my name is Francois. I'm your market analyst here at ATFX Africa. And each morning here, we obviously unpacked some of the biggest movers across currencies, commodities, and indices. And, add a little bit of common sense, because let's face it, markets don't always make sense. Now, as the session starts, please remember that everything that I'm sharing with you during this session is for informational purposes only. At no point in stage am I providing financial advice. If you do want to read the disclaimer in more detail, please click on the description. It is there for you to read as well. So let's kick things off today with currencies, and we're going to start off by looking at USD ZAR. Now, the rand is holding firm at the moment near that 17 rand 50 cents to the dollar, its strongest level since late September. And now, if we have a look at a few things here, interestingly, and remember, when I'm saying late September, I'm meaning late September last year, not this year. But interestingly enough, it's doing this while gold is shining above that $4,000 an ounce level. Now, here we can argue that the rand is riding the coattails of this precious metal, as this is one of our primary exports and we are the main exporter of gold in Africa. So fundamentally, the rand's resilience is less about local fireworks and more about that dollar slowdown as the ongoing US government shutdown drags into its 9th day. So that Washington drama is freezing data releases and, frustrating the Fed. So not exactly a recipe for dollar strength. Locally, traders are already positioning for the South African Reserve Bank's November decision, with expectations pointing towards no rate changes. Now, the South African Reserve Bank's new strategy is clear. Keep inflation pinned closer to the lower end of that 3 to 6% range, according to the bank's latest projections. So inflation should peak around 4% in South Africa in Q4 before they are looking for it to cool to around 3% by 2027. Now, a sign of quiet confidence within South Africa specifically, but not everything is sunshine and gold bars. Attention is now shifting to that US-South Africa trade relations after the expiration of the South African Growth and Growth and Opportunities Act, which expired last week. Now, this agreement provided duty-free access for roughly 17% of South African exports, including vehicle and textiles. Now, President Trump did reportedly support a 1-year extension, but with the Washington shutdown, progress is, let's say, on hold for now. That being said, let's jump into the charts. Let's start looking at what the market is doing, where the market's at, and then we can go from there on forward. So having a look here, we can see, in the last hour, USD ZAR actually fell even further, now hovering around that 17 rand 8 cents to the dollar level. Now, please take into consideration, I am on a higher time frame, so I'm here on a 1 hour time frame at the moment, and we are going to go top down, okay? So bear with me. So we have this, basically it was my support earlier. I can change this to resistance now. So we have this resistance level sitting here at roughly 17 rand 12 cents. And then this lower support here at 17 Rand 4 cents. Now, if we do drop this to a lower time frame, we can obviously see there has been, yes, this change of character right here at 17 Rand 30, but still a massive move. I mean, everything here from 11.30, this break has been huge. So what I would personally suggest here is to wait for a retest of this 17.30 level, or even just a slight pullback to around, even if we can get 17.11, 17.12, and then as we get that continuation and then get that break of structure, we should be able to get an entry over here, which will give us that safer setup. And then targeting these low points, firstly here at 17.04 and then at 17 flat. Even on a 1 minute time frame here at the moment, see, we did have that small pullback, so there is this setup here at the moment there, but that would be a very, very small, sharp scalp, you know, by looking at an entry roughly where we are at the moment. So let's see what price action does give us, you know, because obviously we had that massive change of break of structure here, which is on this candle here at 6 minutes past 12. Now, I would want it just to get closer to that level, and then we could potentially look at a setup from there, looking at a very small short, placing our stop loss here around 17.11, and then potentially looking for about a 2-to-1 setup, aiming for about 17.6. So that could be a potential setup for us. Again, just we'll monitor and see how this is doing. I'll keep an eye on it, and then we can go from there on forward. So actually a very big move that we just saw here on this specific currency pair. But again, you see now already pushing quite high. So let's just see before just randomly jumping into a position on this one specifically. That being said, if there's any questions or anything you guys want to ask, please pop it for me into the comment section so that I can assist you with that. Okay. Let's move over and discuss some commodities here today. So, commodity specifically that I want to have a look at today is natural gas. Now, if we have a look at that one, we're going to have a look at the chart just now, but natural gas prices have slipped to around $13.13 per million British thermal unit. I always need to remember that one. Down just over 6% on the day. Now, on the surface, that seems very minor. I do get that as well. But if we zoom out a little bit, and I'm going to show you all on the charts just now, the story gets a bit more interesting. So, gas prices have rallied over 9% this month, and they're up 23% year on year. Now, that means that clearly everything is not just doom and gloom, but there are signs that the rally is losing steam. Fundamentally, the output, if we have a look at the lower 48 states of America, has been easing, which is now averaging around 106.4 billion cubic feet per day, down from that record highs earlier in the year. Yet, storage remains about 5% above seasonal norms. Now, giving the market, and this is giving that market that comfortable cushion heading into winter, specifically for the US. Now, the weather outlook at the moment is mixed. Generally, average conditions through late October are slightly different, though some cooler spells could lift that heating demand in the short term. But this is not where the story ends. On the global stage, all eyes are currently on Turkey, which is shifting its energy policy. Now, the country is rapidly diversifying its natural gas sources, by increasing liquid natural gas imports from the US, while at the same time reducing reliance on Russia and Iran. Now, the goal here is to become a regional gas hub for Europe by 2028. Now, this shift could reshape regional supply chain in the long run, which could weigh on traditional exporters' market share. Now, if we have a look at the charts once again, that USD's art trade is not ready yet. But having a look at natural gas, starting on a bit of a higher time frame first. So here we can see that it did have a bit of a pullback yesterday, kicking things off there. And it did flirt with what looks like a double top pattern near that $3.36 level. So this reversal also still suggests that sellers are tightening their grip, but we still just here on this key support, which is sitting here at $3.10. Now, this could if we break here, this could confirm, a short-term bearish reversal, but this could give us some nice opportunities here today. So going down to some lower time frames, so you can see here we had this initial move down. There we had that equal high, so that double top, again coming back down. And here we have that change of character. So that's our initial indication that there is a change coming here. And again, I'm sure we'll see a very similar setup here on the 5-minute time frame. So again, see here, there's that strong high that we need to kind of break, which again, if I draw a line across here, let's do this, and then go to the 15-minute, you'll see, okay, that's that high level there, which is a little bit higher than our change of character here, but we did get this test on this support, aka our order block down here. So all we're waiting for now is we did get that change of character. We're getting that slight pullback. So if it does push back up and then we get a break of structure here at around $3.16, that could actually set us up for a very nice long position, which we can have an SL around here at $3.10 and then seeing to ride this a little bit higher. I would say to around this $3.27 level. That should be a relatively nice setup. But again, only should we get that break of structure here at this 316 level. If we don't get that break of structure at this point in stage, and it does break lower and breaks below the support, again, we'll have a change of character here then. And then we'll wait for a retest, the break of structure, and then we'll trade this one from there on forward. So just waiting for this setup to present itself first. Now, if there are any specific instruments you want me to look at, please let me know and I will draw up the chart for you and we can have a look at those setups together. Let's move over to equities a little bit, focusing specifically on the FTSE. So shifting our focus from US and South Africa all the way over to London, where this one's pretty interesting at the moment because the FTSE 100 has added another 0.8%, closing around that 9,549 level, 9,550 around there. And this was just a stone throw away from that all-time high. So what's driving this rally, you might ask? Well, it's primarily currently being driven by mining and banking stocks. So heavyweights like Antofagasta, Anglo-American, Fresh Nilo, all these have posted amazingly strong gains. Again, why? And this is primarily because of gold's historic breakout above $4,000 an ounce. So This is now the crazy part. Gold is even stealing the spotlight when it's coming to stocks at the moment. So crazy, right? Miners are reaping benefits. I mean, if you have a look, Anglo American climbed 3.2% yesterday. Rio Tinto added 2%. Antofagasta surged 4%. Anglo even voiced support for Teck Resources' slower ramp up as its Chilean copper project, which is reinforcing the logic behind that planned merger that they are having. And clearly we can see that, markets are approving of this merger. But that's not the only thing driving the FTSE at the moment as well. The financial industry, more or less banks, is also driving this rally at the moment. So the UK Financial Conduct Authority, so the FCA, trimmed its estimate for the car loan compensation scheme to £11 billion. And this was well below their previous forecast. Now, that lighter burden has sparked a relief rally across major banks such as Lloyd's, which was up 3.6%. Barclays added 1.1%. And Standard Chartered jumped 2.5%, which that's all some crazy figures. Now, let's go have a look at the charts real quickly. Still waiting here. We can also just have a quick check-in on that USD ZAR trade here at the moment. Let's drop it back to a 1 minute time frame. You know what? On this one specifically, I'm happy with this setup. I love the fact that it went and then pulled back in. So I'm going to personally get in on this one. So I think this setup has matured to being ready. So again, obviously, as stated in the beginning, not financial advice, just providing information here. Looking at setups for myself as well. So I'm in on this one. Stop loss around the 17.11 and then aiming for a bit of a 2-to-1. So let's see how that scalp trade plays out from there on forward. Okay, cool. Let's have a quick look at the FTSE. Let's start on a bit of a higher time frame. So let's kick things off here on the hourly. So here you can see that the FTSE's momentum remains firmly bullish here. I mean, the index has climbed 3.3% for the month. It's up nearly 16% year on year, which is extremely impressive for an economy that is still juggling inflation and interest rate uncertainty. Now, if we have a look, immediate resistance is up here at that high point, which is sitting at that 9,580 level, with support here at 9,480. Okay. Now, we can see that there's been this nice bounce. So if this momentum holds, we could aim for these high levels again. A break there could aim for a break of this 9,600 psychological level. So looking at some lower time frames here at the moment for today, we did get a very nice bounce, but this was super early this morning. And at the moment, markets are relatively consolidating right here at the moment. Now, we did have this bounce plus the pullback and now that change of character. So I would ideally on this one like to see a bit of a break of this bullish flag pattern here first. So if we get a nice clean break of this bullish flag pattern, we can then look for a nice clean setup. Even if we get the entry around, I would say I'll be happy around this 9,520 level. Place our stop loss below these low points here and then aim for a little bit of double the distance, which will put it up there at 9,566. So that's kind of what the setup is looking at that one at the moment. Let's just jump back quickly to see how that USD ZAR trade is doing. Drop that back to a 1 minute time frame. Okay, we're still hovering roughly around entry at the moment. So no fireworks yet. Obviously, natural gas might take a second or two as well to come into play on this one. Again, waiting for that now new break of structure higher after that bit of a pullback before getting into the trade on this one. And then just patiently waiting for this bullish flag pattern to break on a 5-minute time frame here on the FTSE 100. Again, if there is any specific instruments you would want me to analyze as well, happy to have a look at them, happy to provide my input on that, and then to go from there on forward. So I believe that kind of brings us to the end for now for our pilot session, as well, there's no one for me to talk to at the moment, so not so much fun. But thank you very much. As always, as I stated in the beginning as well, nothing provided during this session was financial advice, just information. Please still ensure to double check your own analysis and then go from there on forward. So, traders, as always, thank you so much for joining me. Stay sharp, stay focused, and trade smart.